Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And last week we had some issues with the chat. People could not talk to me. You guys were saying that my sound was going in and out. So I do think that I got it all fixed. I'm seeing all of the gauges go up and down as I'm talking right now, but you'll have to let me know if I'm going in and out or making funny sounds. I'm also seeing the chat comes through. So Dad jumps on and says, looks like it's fixed. So there we go. We're going to give Mikey a big thumbs up for that one. But today we are talking, which I'm so happy about, but I do want to remind everybody that this is an interactive show. So please feel free to put your questions into the chat. I am more than happy to read them out loud and answer them for you. I did come on 15 minutes early because I was worried about the sound and I was worried about the chat not working. So I wanted to make sure that if I needed to shut it down, try to fix it again and start it over, that I could get on and be live by 1. But it looks like it's working, which is fabulous. So happy to be here and happy to answer any questions that you have. Again, remember that this is a live show, so please put those questions into the feed and I will read them out loud and I will answer them for you. I also want to give you one more reminder, and then from there we're going to jump into the topic of the day. But if you are getting a text message today, and you might have actually gotten 2, because I wanted to make sure that I reached everybody about once every month to 2 months or so. I make sure that I reach out to my old text group, which was mom. So many of you opted in by texting the word mom to my phone number. And I told you all I was going to be retiring that. But that is where about 4,000 of you are that used to jump in and watch the show all the time. So I do want to remind you, if you got a text today, but you have not gotten one in quite some time, to make sure that you do opt into the new text word, which is live, L-I-V-E. So text live to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Easy enough to remember. That's the phone number to call my office if you'd like to give me a call and you want to chat about anything that you might need, mortgage or real estate wise. So let's jump in really quick. I want to talk about today we broke an 11-month barrier. So for the last 2 shows that I did, I kept telling you guys that we were at this standstill. We had a high barrier and a low barrier, and we could not break through them in 10 months. And it was actually over 10 months. Today we are at 11 months and we finally broke through that barrier that's been stopping us from getting our interest rates to go to the next level. So that is fantastic news. Now, we didn't break through by very much. So 150 basis points, which last week I explained what basis points were, but 150 basis points is where we kept hitting our wall and we couldn't break through it to get into better pricing. And today we broke through it and we hit 153 the last time I checked. So I'm going to jump in right now to that, and I'm going to actually update you as we're live what it is showing me right this second. So I am seeing that we are at 100.56. So we are very, very, very slightly over that barrier that we needed to break through. But this is still phenomenal. This is phenomenal news because we want to make sure that we stay there, right? So just one day to go over it by 6 basis points is not enough that it's going to move our needle significantly. But what it does do is is it creates a new floor, and we want that new floor, but it's got to hold there for at least another day or two before we've really created that as a new barrier. We've got to close there at that number, so we've got to make it through the whole day today at that above 150 mark, and then we want to try to hold it at least for another day or two. But that is going to then become our new floor, which is also then going to give interest rates an opportunity to possibly break out. So if any of you guys are into crypto or you're into stocks and you like to watch videos and people that talk about that, you'll hear a lot about that with as far as, breaking through barriers and can't get above highs and lows of the last so many months or levels. And that is exactly what interest rates are doing as well. That's exactly what we're talking about. So great news. We've kind of, made it through that barrier. Are we going to hold? I'll be able to tell you guys next Wednesday if we did hold and exactly what is going on and where are we at. So the next thing is, what is going on with interest rates right now? So about 2 weeks ago, I told you guys that it looked like interest rates, we had some good news come out and interest rates started to get better. And for the last 2 weeks, they have not only held steady, but there's been a couple of days where they've actually improved a little bit further, popped up a little bit, improved a little further, popped up a little bit, right? That's just how it goes. But we are actually doing great. We're looking better today than where we've been in quite some time. We are looking better today than we were 2 weeks ago when we did this show. We're looking better today than where we were last Wednesday. So this is all great news. Now, are we looking better by 0.5% in interest rate better? No, but still we're getting an eighth here, an eighth there, as the days move on. So I would say that since 2 weeks ago, we are probably already about 0.25% better in interest rate than where we were at that point in time. We're about an eighth better today than where we were a week ago. And what we want is we just want to see that momentum keep going. So we've really all got to pray that we keep that, above that 150 mark and that can hold and become our new low, right? We want that to be our new low where it bounces off that level to not get worse. So that is the absolute goal right now. Now, why? Why are things continuing to improve? What was said, and I talked about this in my show last week as well. And I told you guys that the Fed Chairman Jerome Powell, they had their Jackson Hole Symposium last Friday, and that he was anticipated to talk, which he did, and whether or not, what he said would lead people to believe that we're going to see a rate cut come in September was going to kind of spark things, and it did. So what he did say at that symposium, just bringing it all down into a nutshell, not going through the exact words, was it was very pushed forward towards that they are very strongly considering cutting the rate come September. So we all want to keep our fingers crossed that that comes through and that they do that Fed rate cut, right? We need things to start changing. We need these interest rates to keep improving. Now, what is going to happen between now and then? And here's the big question that I'm going to get, and this is going to go on and on and on, and it's going to go on for quite some time. So the question's going to be, I need to do a loan right now. Should I lock or should I wait until the Fed makes an announcement that they are cutting the rate? So that is a very good question, one that comes with, it makes sense. It's if you're not in the industry, you don't understand how interest rates work. It's something that is a question that should be asked. It's common sense, right? It would seem like if they were going to cut interest rates, then should I wait? But the answer to that question is actually no. The way that it works, and we've talked about this, for years now when we've talked about interest rates and where do our rate sheets come from for mortgages, is anticipation. So because of what was said at Jackson Hole last Friday, the anticipation right now is that they are going to cut rates come the September meeting. The pricing of what we would see from a rate cut, the improvements that we would see, are already being worked into our rate sheets. So that is why we're seeing improvements. That is why we just finally made it through an 11-month barrier, and we finally pushed past that 150 basis points by 6 basis points, right? We're at 156 as of 2 minutes ago. So they are already working in with anticipation of the Fed cutting the rate where we're going to see mortgage interest rates go. So if you need to do something, get it done. It is okay. Do not worry that you're going to miss out on a 1/4 point rate cut or a 1/2 point rate cut. It's already being anticipated and it's already being worked into the rate sheets, which is why they are improving today. Now, that does not mean that you don't call me on the phone. We do a loan application and we wait to lock in the interest rate. We may choose to wait. I work with all of my clients and we go day by day. It is not, and when I say day by day, it's actually more like hour by hour, based on, us being in contact Monday through Friday. We know where the interest rate is at the time that you take the application. If the market is in an improving position, there is no reason to jump the gun and lock in the interest rate. However, we also can't see a crystal ball. I can't see what is going to come, the next day or the day after that, and especially not 2 weeks down into the future. But what I can see is what is going on today. So if you were calling me today to do a loan application and asking me if we should lock in your interest rate, I would tell you no. Today, the market looks good. Today, we appear to be improving. So hopefully tomorrow's rate sheet will be one that is slightly better than where it was today. Now we wake up tomorrow morning and you and I talk again and we say, how are things today? You know what? Today, they still look like they're improving. Now, all of a sudden, some big report comes out and it is 1 p.m. and I get a big alert on my phone that tells, because obviously I've signed up for all of this, it's my business. And I then call you or text you, however fast that I can get in touch with you, because we know how we communicate with each other. And I say, hey, it looks like we're starting to slide downhill. I think we should lock in the interest rate. Now, 100% it is up to you. You might say, you know what? Nope. I'm a gambler. I'm going to wait. I don't want to lock it right now. Let's see what happens. And I'm going to say, no problem. It is 100% your call. You are in the driver's seat when it comes to a rate lock. Remember that. Even if you don't work with me, you work with another lender, make sure that you have that conversation with them. Hey, please don't lock the interest rate without talking to me about it first. You are the driver. You are the one that is making the decision if you want to lock that rate. But the bottom line is, you do not have to lock right away. We can watch the market day by day. We can try to lock in at the very best timing possible, but there's just no way to see far ahead into the future. Like, hey, I've got a 30-day escrow. Should we wait, until the end to lock? I can't answer that question for you, but what I can tell you is that we already know that the anticipation is that they are going to cut the rates. With the anticipation, they are already factoring that into the rate sheets that we have right now. Could they continue to get a little bit better for the next couple of days or even a whole nother week? They absolutely sure could. And that's why we just go day by day. There is no mortgage loan that we are doing that is closing faster than 7 days. By law, by disclosure timelines and guidelines, we cannot close you faster than 7 days. So we've got time to watch if it is a loan that we are starting today. But the minute that we start to see it slip is when we would want to lock in. Now, what happens if they come September, they're there, the Fed makes the announcement and says, you know what, we decided not to cut rates. So now this anticipation of a rate cut was already there, all built into the rate sheet. And then what? Then what happens? Well, everything goes berserk, okay? And which direction that it goes, there is no way to say. It would make sense, common sense, that if they choose not to cut the rate and they change their mind, which is very, very possible, that interest rates would then shoot right back up again. And that barrier that we broke today, we might just lose that, right? That's no longer our low. So that very well could happen. The investors and the market could read that choice much differently than that, and all of a sudden interest rates could get better, even with the decision to not cut the rate. So they could just hold the same, right? Everything could be just the same. There is absolutely no way to know how the market is going to react when the Fed says something, or when a particular announcement is made, right? So we've talked about the inflation reports, the CPI, and we've talked about unemployment reports. We've talked about retail spending and how all of those things get interpreted by the market, and then investors bring their money, put their money, sell their money, move things around based on anticipation. That is just what this is. So as of right now, with the anticipation of a rate cut come September at the next Fed meeting, we are seeing interest rates improve. It's already getting cut, already getting built into that rate sheet, as I said. And that day, I'm going to tell you this is exactly what is going to happen. That day, I am going to get phone call after phone call after phone call from clients that say, where are the interest rates today? I heard they cut rates. Where are the interest rates today? Should we lock in? I heard they cut rates. So I just want to make sure, since you guys are on, you're watching, you follow me, and I'm educating you, understand that that day is not going to move the needle. That day, if they cut it by a quarter, they cut it by a half, they were to cut it by a point, that day is not going to just all of the sudden drop interest rates for mortgages. What drops interest rates for mortgages is anticipation. It is the market. It is what the investors believe is going to happen and where they move their money based on decisions that are made. So should you be waiting to lock in an interest rate? If it were me, I would be starting the application. And again, this is assuming you have something that you need to do. You need to do a cash out refinance. You got to get debt paid off. You need to, you're purchasing a home. Obviously, you have to start your loan application, whether that be a pre-approval or whether you're in escrow or you're under contract if you're in a title state. Those things need to happen. You can't stop those things. But if you're looking for money to do home improvements, whatever the reason is that you are looking to do the loan application, I would not stop. I would do the loan application, speak with me or one of the girls on my team. Let's talk about what the goal is. Do we want to consolidate a first and a home equity line of credit that you've taken? We have so many clients that over the last 3 years have taken home equity lines of credit because that was the cheapest way to get the money that they needed because of how low their interest rate was on their first mortgage. A lot of those clients, though, have home equity lines of credit that are in the 8, 9, 10, 11, even 12, 13% interest rate range. So when we take $100,000 or $200,000 or whatever that number is that you have in that home equity line of credit, and we blend that together with your low 3 or 4% interest rate on your first, you might be sitting at a blended rate between all of your money of around 6%. Let me just tell you that we are very, very close to 6% right now. I just quoted a client today on a cash out refinance on her primary residence, great credit, low loan to value. And we're going to go into that here in a minute. How do we get to your interest rate? But I was able to quote her an interest rate on a 15-year fixed at 6 1/8 and on a 30-year fixed at 6 3/8. Those are really good numbers. And many, many of you out there with a first mortgage, even if it's at 3 or 4%, and a second mortgage that's at 9 or 10 or even 13%, we are finding that blending them together is a lower interest rate. And, you're able to save money monthly by getting all of that consolidated. Not to mention that it does create less of a headache when you've got, when you have only one mortgage payment to make. So we are there depending on what it is that you need the application or you need the mortgage financing for. Don't stop. Don't wait for the announcement that day. There's a very good chance that if things don't go as planned and another couple of economic reports come out and the Fed changes their mind and doesn't cut rates, this could be a very short 2 2-week window that you have an opportunity to get an application in and to get an interest rate locked. So please make sure that if you have been thinking about doing something, whether you're out looking at homes, try to get under contract, try to get, escrow opened up so that you could get a rate locked in. Whether you're trying to refinance for one reason or another, make sure that you are reaching out and that you are talking to us. So once again, how do you guys reach me? You call my office. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. You guys can go to my website, go to mortgagemomradio.com. Do not forget the radio. So it is mortgagemomradio.com. That is my website. You guys can hit the contact us button. You can start a loan application. You can listen to the podcast, which is basically what you're watching on YouTube right now. You guys can do all kinds of great things right there on my website. I do have a finance calculator on there for you as well. And then obviously you can call the office. And I want to remind you all, if you'd like to know what is going on week by week, I always do this show every Wednesday at 1 p.m. or around. So today we started at 12:45 to make sure we didn't have technical difficulties. But it's always right around 1. So 1, 12:45, 1:15. But I send out a text message with the link to join. So make sure you do get yourself opted into that. If you got a message today but haven't gotten one in a while, you're opted into the wrong list. So make sure that you guys text the word LIVE, LIVE, to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Now, I don't see any other chats that have come in. So I am fingers crossed, hoping that my chats are working and that the only person that has actually put a comment in the chat was my dad. But if you were trying to put a comment into the chat and I'm not seeing it, I didn't read it out loud, I didn't answer it for you, would you please send me an email? I want to make sure that I get you guys the answers that you're looking for. Send it to me directly. It's really easy. It's Debbie, DEBBIE, at mortgagemomradio.com. You can send me any email that you'd like. So if you're trying to put in a question and it's not coming through and I can't see it, please send me your question. Please email it over. I will respond to you immediately and get you the information that you're looking for. So I got a me, I'm in. So, Mary Elton, she's the Emmy. So Mary, great to see you. Lori gets on, she says here. So I'm happy to see Lori. So great. I'm just happy to see that the chat is working. So I don't see any other questions. I think I drove home the point. Get it started, get it going. We're going to play it by ear day by day before we lock in. This could be a very short 2-week window before the Fed could turn everybody upside down and everything goes roaring the wrong direction. And, we might want to get things really, that chat started, and we might want to really be, comparing options and kind of figuring out what is that interest rate that you need for things to make sense to move forward. And then, of course, if you're out there and you're looking at a home, gosh, get out there this weekend for real, you guys. Get out there, start looking, look hard, start negotiating, start writing contracts, get serious. And if you haven't gotten pre-approved yet, make sure you reach out and you do. You can't write an offer if you're not pre-approved. You need to have that. You need to know that you qualify. So that is what me and my team are here for. We are here to help you. I hope you guys have a fabulous rest of your week. Don't forget to opt into live if you want to hear from me next week, because my mom followers will not. So once again, last time, text the word LIVE, LIVE, to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. I hope you guys have a fabulous rest of your week, and I'll be right back here again next Wednesday at 1 p.m. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. pick up the phone and call mom.